Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped below 99 on Wednesday, nearing its lowest level since late last October. The move followed the Federal Reserve's 25 basis point rate cut, though policymakers signaled only one cut is likely in 2026. A subtle but important tweak in the Fed's statement referenced the extent and timing of additional adjustments, suggesting officials may pause further easing in January while they assess new data. WTI crude traded near $58.7, softening midweek as markets focused on Russia-Ukraine peace negotiations, ample supply, and the upcoming Fed decision. Traders are watching whether a potential peace agreement could ease sanctions and free up more Russian crude, adding downward pressure on prices. Supply concerns also linger after Iraq restored output at a major oil field. With uncertainty ahead of the decision, crude is expected to remain range-bound. Gold surged above $4,230 on Wednesday, briefly testing October highs and setting a fresh all-time record. Markets interpreted the Fed's decision and Chair Powell's post-meeting comments as opening the door to additional easing. Traders now assign roughly a 68% probability of 2 or more rate cuts in 2026. The Fed also upgraded its growth outlook while trimming inflation forecasts for 2025 and 2026, yet avoids a collapse in long-term yields. This macro backdrop continues to provide strong support for gold. The yen traded near 156 on Wednesday after 3 days of sharp declines, even as Bank of Japan Governor Kazuo Ueda suggested the economy is moving closer to achieving the inflation target, implying a potential rate hike soon. Markets are now pricing in a possible BOJ hike next week and are focused on Ueda's commentary for clues on policy direction in 2025. The yen also remains under pressure from concerns about Japan's fiscal health following Prime Minister Sane Takaichi's large spending plans. Euro saw a strong upside surge on Wednesday after the Federal Reserve delivered its third consecutive rate cut. The pair rebounded sharply from a 4-day pullback and pushed toward the 1.17 resistance level as investors reassessed the Fed's neutral-leaning message and aggressively sold the dollar. Attention now turns to Thursday's US labor market data for confirmation of the macro trend.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.